Concerns about the ongoing strength of Asian economies set the tone for world financial markets overnight. Those concerns were driven by financial data out of both Japan and China, which indicated that those economies may very well be slowing down. In terms of Japan, orders for new machinery in June plunged, while in China, inflation slipped to its lowest levels for around 29 months. In Europe, Eurozone finance ministers met in order to discuss ways of easing the ongoing debt crisis in Europe. High on the agenda will be the conditions to be attached to the €100 billion loan in order to bail out Spanish banks, though it's unlikely that the final conditions will be decided until about July. There are also strong rumours circulating that the Eurozone finance ministers will take mercy on Spain, giving them an extra year to reach budget deficit targets. This will also enable the Spanish government to relax some of the spending cuts which have exacerbated the ongoing recession in Spain. However, this good news actually didn't help markets because Spanish bond yields continued to spike, with 10-year government bond yields now going through 7%. So looking at markets, the Dow slipped by around 36 points, and most other European markets were flat. In terms of the currency, the Kiwi was relatively flat, though it did lose ground against the pound and the euro. Recently, the US Department of Agriculture released data in terms of prices received by and costs incurred by US farmers. That data shows that in terms of comparison to 1 year ago, US farmers are actually receiving only marginally more in terms of prices received. However, costs have increased in that period by around 6%. That compares to the US Consumer Price Index increase of around 1.7%. One of the primary drivers behind the cost increases have been the cost of feed, which is up around 11% year on year. Wages and interest are also up. However, interestingly, interest actually comprises a very small part of US farmers' costs, at around 3.5% of total costs. Fuel costs, as would be expected, have actually fallen since last year, driven predominantly by the fall in oil prices. The outtake from all this information is this: US farmers, like their Kiwi counterparts, are also suffering cost increases beyond the normal consumer price index. In the context of falling commodity prices, this means that cost management going forward is going to be a significant focus.